Persistent Systems is also doing quite well with a gain of around 11%. Mr. Sandeep Kalra, the CEO at Persistent Systems, joins us to talk to us about the way forward. Well, a good show from you yet again, 5% plus kind of growth coming in. But if I had to ask you about the demand environment now versus last quarter, a couple of your peers have said that things have improved, BFSI has bottomed, etc. Will you concur with that, Sandeep?
I've seen we delivered 18.4% year-on-year growth, 5.3% sequential growth, and the total revenue came in at $345.5 million. Now, if you look at within that, the segmental growth, it was led by healthcare life sciences at 71.2% year-on-year, and BFSI came in at 15.3% on a year-on-year basis. Now, if we were to look at the overall demand environment, I wouldn't say that it has changed significantly. There are small green shoots in terms of financial services specifically that you asked, where we are seeing discussions about newer programs, discussions about things that are leading to either revenue growth or adoption of AI in making, whether customer experience, whether operations, or even the application development, etc., more smarter, better, and so on and so forth. Now, market still is cautious because there are dynamics like the US elections, there is the Middle East crisis, etc. So too early to say that there are going to be more spends or less spends. We'll watch for the next 1 to 2 quarters and let it pan out.
Okay, so too early to call out spends for next year. Still a couple of quarters away with respect to clarity on that. But the good news, Sandeep, in Q2 was the broadening of growth that we saw. BFSI healthcare did very well for you, though tech and high tech were a bit slow. Going forward, do you expect this trend to sustain, that healthcare will lead growth for you?
So from our perspective, healthcare life sciences will definitely, lead the growth, followed by BFSI. Tech segment will also come up, and we expect the next, 2 to 3 quarters, you will start seeing a growth in tech sector as well, making it a secular growth for us across all segments. This is based on the bookings we have done, the order book that we have announced in the last several quarters, as well as the pipeline that we are seeing for the current quarter and ahead.
Okay, point taken as far as the sectoral breakup is concerned, but I also wanted to get a better sense from you regarding what's happening with respect to the overall order booking, because this time around the TCV, ACV, new TCV were very strong as well. Going forward, how is the pipeline? Which areas are driving growth as far as order bookings are concerned?
Yeah, so if you look at our overall, the growth in terms of revenue, and that is directly reflective of the order book we have had in the past, healthcare has led the pack, and it is across multiple different segments and multiple different customers within healthcare. And healthcare for us is pharma, payer, provider, and scientific instruments, medical devices. Similarly, if you look at the last 1 to 2 quarters, BFSI has seen an uptick. Now, what we are basically saying is our investments in technology, and please keep in mind the technology services landscape is rapidly changing with the, things like the entire thing about ChatGPT, which nobody talked about 2 years back, the generative AI and AI at broad, there's a disruption happening. We are a little ahead of the curve than many other firms. We are leveraging that to give our customers a platform-driven services approach, and that's working out well for us. And our pipeline, etc., reflects that. So hopefully, the fact that we have executed very well for the last 18 quarters, we have grown sequentially for 18 quarters, good economy or bad, we know how to pivot what works in different economies, and combine that with the technological advancement that we are doing based on AI, we are confident our order book, pipeline, etc., should look healthy even going ahead.
Okay, order pipeline should look strong going forward as well, but the reported EBIT margins were flat quarter on quarter. I understand that there was wage hike impact, but that got offset by the earnout reversals. Going forward in Q3, do you expect this trend to continue of earnout reversal, and what margin levers you have?
Whether you talk about earnout support, whether you talk about wage hikes, whether you talk about, the utilization, many other factors, it's like you're running a business. There are always going to be puts and takes. We have basically said in our last earning call and even otherwise, our aspiration for this year is to deliver industry leading growth with the margins where it were for the last year. We are on that path. And as we go ahead, we have very clearly said we want to be in the top 25 percentile of the growth in our sector. And we want to optimize our margins by 200 to 300 basis points as we go ahead. And we are confident of delivering to that.
Confident of delivering industry leading growth, that's what you have been doing for the last few quarters at least. But any acquisitions on the card? There's a lot of consolidation in Europe. Are you making use of that opportunity?
Our acquisition strategy has always been capability led. not revenue driven. We are not looking at bigger acquisitions. We are looking at capabilities that we can take to our customers, make our services even more relevant. And whenever we have anything to announce, we'll let you know. We are always on the lookout of good capability led companies that we could look at.
Okay, on that note, Sandeep, I'll let you go. Thanks so much for making time and speaking with us.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.